Hey guys, Stock Saturday, and it's been an incredibly good week in comparison to the markets, especially. The S&P's up just under 1%, Nasdaq is pretty much flat, and yes, I'm up 9.7%. This has sort of come from quite a few bits and pieces in gold and silver, but largely Cleanspark, which I can come to in a second. But yeah, sort of headlines are that's up 45% for the week. A little bit more than I was expecting, especially given the results, which we can have a look at now. So the quarterly results have come out for Cleanspark. This is, of course, a little bit lagging. This goes up to September, and a lot of the sort of gains we've seen in the crypto overall market have come sort of since then. And of course, we get similar to TSMC, you get monthly revenue numbers and sort of Bitcoin mined and that sort of thing for Cleanspark. So yeah, I'll have a look at the December news as well when that's out. I think it might be out now actually, but yeah, we'll have a look maybe next week. But the quarterly results were sort of interesting. This obviously doesn't give you the Bitcoin mined most recently. This is going back, as I say, to end of September, but they had sort of 29 million of cash on the books, which is pretty good. Bitcoin on the books grew to 56 million. This is quite a bit up since then. From the looks of it, and yeah, sort of current assets reasonably good, very low debt, but some sort of interesting and disappointing numbers were November the 30th, or they sort of gave the outstanding shares for the end of the quarter were 160 million, which is already higher than my sort of projected total shares in my model. I sort of had 150 million, but they've also said as of the day of the results, November the 30th, they're up to 184 million. So I'm guessing some of this may be paying for the extra mining rigs that they've sort of announced. They've sort of said they want to go from 16, the sort of end goal was 16 exahash before and is now 20. So yeah, part of that might be sort of going to work on extra mining rigs, but of course the difficulty has grown, so they kind of need to buy those rigs just to keep pace. There is sort of talk that this may be sort of all rising up, pretty hard until the halving, and then a load of people will turn off a lot of the unprofitable machines. So you could see hash rate sort of come down a reasonable amount after the halving, and difficulty sort of come down correspondingly. But you do also have lots and lots of facilities still going up. So yeah, you could have a lot added and a lot maybe taken away. But yeah, the 184 million shares was a little bit disappointing. That'll take a knock. I need to update my model to sort of reflect that. And the other thing was the cost side of things. So revenue obviously up from 131 million to 168, but cost of revenue excluding depreciation up from 41 million to 93 million. Now, they don't give cash flow statement, they just give a balance sheet and income statement. So I might get on to investor relations and just sort of ask whether this cost of revenue is purely direct costs, electrical costs and sort of direct costs of running the facilities, or if expansion costs are included in this. Because if expansion isn't, and that is just the new sort of direct cost, and it'll be increasing going forward when sort of more facilities are on board, then that's not really good. That will sort of take quite a hit on the sort of fair value model that I've produced, and obviously people are getting very excited and bidding up the stock just because sort of crypto is going up. But if I don't think the sort of long-term profit and long-term revenue may be there, but if it's sort of not long-term profitable, then maybe I just want to be in something else. You could almost make a case for just sort of buying MicroStrategy or something instead, being just basically a proxy Bitcoin ETF rather than, this is supposed to be sort of leveraged Bitcoin essentially. If it isn't profitable, then that's not good, even at, $80,000 to $100,000 Bitcoin. So yeah, I may get onto them and see what that's all about. If the 93 million includes expansion and that will come down after the facilities are built, then that's perfectly fine. So yeah, interesting. And the quarterly results are out for KGHM, mentioned last week. This is sort of my newest position in switching from IG markets to interactive brokers on the ISA. I've taken the opportunity to switch from Atalaya Mining, which was my sort of small copper miner, to KGHM because they sort of seem to have quite a lot more going for them and a little bit more sort of security. Atalaya had quite low mine life, sort of 6 years or less on some of their mines, and sort of questionable possibility of expansion, whereas KGHM have quite a lot more mine life. Just sort of looking at their sort of mix and their targets. So in sort of 2020, they're measuring sort of their base year and where they're hoping to be in sort of 10 years. They were doing 560,000 tons of copper, and the end goal is 600,000. So it's not a huge increase over 10 years. It's they're quite stable on the copper side. And that's the domestic side, and the international side has been doing 150,000 tons. That looks like it's going to reduce over the years, but overall they're still going to be hopefully around 600,000 tons, which is sort of very good, really. This year, so far in the 9 months to sort of September 2023, they've done 443,000 and 83,000. So yeah, well on the way to 600,000, and that's sort of very long mine life, as I say, steady mines, well past 2030, sort of really towards 2040. So yeah, I like that a lot better than sort of Atalaya, really. And then the other side is silver. So Atalaya was basically pure play copper, whereas KGHM, I think, has an underappreciated silver side. The price, from the looks of it, does seem to move reasonably sort of not 1-to-1, but very sort of similarly to the copper price. And when silver goes up and down, it doesn't tend to move quite as much, which, as I say, I think is a bit underappreciated. They're actually the second largest silver miner in the world, which is quite promising. It's sort of something that I wanted. More silver exposure. Some of the gold and silver miners that I'm in are sort of shifting more towards the gold side, and I was sort of wanting more silver. There aren't many pure silver miners. A lot of them are sort of exploration or sort of various other mixes of sort of silver and some other metals. But silver and copper, as basically their only two, metals that they're producing, is, I think, an incredible mix. So they actually measure it in tons. So I sort of convert that, using a few multiples, of course, get it into kilos and then pounds and ounces. They're sort of doing about 50 million ounces per year, which is a huge amount of silver. My other sort of favoured gold and silver mining stock, Coeur Mining, at the moment is doing 10 million ounces. So KGHM doing 50 million is very nice. They are sort of $5 billion market cap, and Coeur just touching 1 billion, I think. So yeah, 5 times the silver production and 5 times the market cap. But as I say, I think the market cap is largely sort of based on the copper side, and people sort of see the silver as an extra. where, I think with photovoltaics and various other sort of electric vehicles and the sort of green transition also needing a lot of silver, I'm very bullish on KGHM silver side and being sort of underappreciated. And they're also similar to a lot of other miners wanting to reduce CO2 over time, of course. The sort of large part of this seems to be by reducing energy consumption from outside. They want to generate their own electricity and use that in-house through renewables, which is very good. And they're up to 22% of their own energy produced for their total energy needs, and they want to get that to 50% by 2030, so producing 1.5 terawatt hours. And they're saying in the 9 months to this year, they've done 358 gigawatt hours. So yeah, they're a little bit off their 2020 actually, so they do need to increase that. They also want to increase recycling of scrap as well. 124,000 tons of scrap, and they want to get to 350,000. Again, they're sort of near their 2020 total. So yeah, that's a good goal. So I should just highlight as well where the mines are, which is another one of my sort of very bullish sides to them, because a lot of it is in North America and Europe. So you've got Sudbury, United States, some in Chile, which is part of their international side, and then quite a lot in Poland. So sort of EU obviously struggling to get new mines passed because of EU emissions and sort of ESG concerns. So having a sort of huge amount in Poland sort of running and long life mines, I think is very good. Obviously we're going to need a great amount of copper and silver for electric vehicles and energy in the EU. So I think KGHM are sort of pretty much mission critical. And then you've also got sort of refining capacity in Poland as well, and other projects in development in sort of Canada, North America, and Chile as well. So Chile, obviously, one of the biggest copper sort of countries in the world, or the biggest, I think. So yeah, that's a very nice sort of global spread, really. They're not sort of in Middle East and Africa, which obviously are lucrative opportunities, but potentially sort of politically unstable. I think the US are obviously going to want their own production if they can, sort of production to be coming from the US, and EU I'm sure would like it to come from the EU. So Poland is a very nice location there. They also have a small sort of section off China. So just looking at profitability, that is down because you had sort of quite a high in copper prices, sort of 2021 and 2022, and that has sort of faded away in 2023 as you're sort of getting lower demand from China and sort of lower demand across the world, but and sort of supply surpluses as well. That is sort of projected to potentially continue into next year. But from 2025 onwards, it's looking like we'll have a continued deficit for sort of many, many years. So, yeah, it's potentially low profit, but I think people are sort of looking forward. So this quarter last year, you had 655 million Polish zloty. This is all in Polish zloty. You can convert back by dividing by 4, I believe, to get to USD. Most people would sort of use USD for comparison on miners and commodities. And yeah, that's come down from 655 last year to 194 with the sort of much lower prices. And the 9 months, January to September last year, was 3.6 billion and is down to just over 1 billion. So that's not ideal, but yeah, it's could be worse. Profit after tax is down from just over 1 billion last quarter to this quarter last year, down to 435 due to sort of lots of other hedging and operating costs, finance income, and all the usual bits and pieces. And they have lots of sort of hedging instruments and that sort of thing they use. They don't always want to just sell copper and silver at whatever price it is, because that leaves you a bit vulnerable. So they'll have sort of profit at the top on sales, and then profit for this period, and then total comprehensive income, which is sort of net profit, if you like. And yeah, that's down to 318 million. 1.1 billion for the 9 months, down from last year. But it's the long term we're looking at with this, of course. Silver has sort of done pretty well since September, so could be a nice little surprise. Copper has sort of been rising as well, so expecting next quarter's results to perk up a little bit. And the stock has sort of already risen sort of on that news, because you don't really need to wait for quarterly results to rise. You know what they're mining, and you know the price of what they're selling it at, basically. Balance sheet wise as well, they're fairly strong. Sort of cash risen from 1.2 billion to 1.4 billion. Polish zloty again. And sort of debt wise, they've got 5.3 billion in long term, and just over 1 billion in short term debt. So bit more debt than cash, about 3 or 4 times, but that's fairly normal for miners, and obviously not too much debt really. That's sort of what is that, $1.5 billion US dollars of debt for a sort of $5 billion company. That's pretty good, I would say. So the thing I am still working on with them is costs. They sort of don't really give a breakdown of how the other miners certainly do. Certainly on the silver side, I would expect to sort of see all-in sustaining cost for the silver, and sort of copper, just see it measured as all-in sustaining costs. They sort of call it C1 unit cost. I'm trying to sort of get to the bottom of whether that is sort of cash costs or all-in sustaining costs, or sort of somewhere in between, but they call it sort of C1 unit cost. And sort of copper at $3.80 US dollars per pound, they're at sort of $3.01, and that's sort of risen recently. This is for the first 9 months this year. Last year it was $2.39. Sort of the most recent couple of quarters, it's pushing up, $2.97, $2.98, although that is down from the first quarter this year. So yeah, bit of potential there, but it is quite close to the actual price. A lot of other sort of miners, your Rio Tintos and sort of BHP have, I'm guessing in the sort of South America and African mines and that sort of thing, it's lower costs, and they're sort of maybe more like $1.50 to $2 total cost, where KGHM is $3.01, but that provides more leverage if the copper price goes up, because their profits will rise a lot more as a percentage than your Rio Tintos and BHPs. And you've also got the silver side on that. I think they sort of see it as, not an unwanted byproduct. Obviously, it's very valuable, but they just see it as a byproduct, and so don't really split out the cost of the silver. So, looking at news for the week, there was sort of a reasonable amount of news. Monday, you had new home sales in the US for October, down from last month, and quite a bit worse than expectations. So, maybe sort of rates starting to bite in the US. Sort of been holding up very resiliently in the US. You had sort of house price index, but that was old. That's September. You had Wednesday, a few bits and pieces come out, sort of PCE. You had GDP for Q3 previously came out as 4.9%. That's been revised upwards. It's still provisional, so I always get a bit wary when they start sort of giving these numbers and keep revising them and revising them. These sort of came out last month, I think, and sort of you're looking at July to September. If you don't know July to September, sort of by the end of October, then do sort of wonder about these calculations. Sort of now we're talking, end of November. These are coming out, and it's sort of still being revised. So yeah, they just like to sort of paint a nice spin on it. But 5.2% for sort of annualized GDP. That's pretty good. And then Thursday, EU always seems to go first with inflation. Again, provisional numbers, but core CPI down from 4.2%. They were expecting 3.9%, and it came in much lower, 3.6%. Actually quite negative on the monthly, even core 0.6% negative, more than headline. So yeah, don't normally see negative core CPI. Ordinary CPI down from 2.9 to 2.4 was expected higher. So yeah, EU sort of getting hit quite a lot. Unemployment rate still 6.5%, so that's a lot higher than everyone else's. Then the US, they had initial jobless claims pretty much in line, but continuing jobless claims are up quite a bit. So people are still getting laid off, but they're not getting back into the workforce. They're sort of, people are expecting them to be getting laid off, maybe spending a month or two on sort of job seekers allowance, the American equivalent, but they're not. They're still unemployed. So yeah, that's maybe something to keep an eye on. Nationwide house price index for November as well just come out, sort of slightly better than expectations, positive on the month. They were expecting 0.4% down. Previous month was up as well, so they were expecting a bit of a reversal, and it is still up again, so minus 2% on the year now. Whether it's just sort of holding up, before a large drop, I don't know, but this is sort of baffling, really, considering interest rates where they are. Sort of mortgage rates at 6-7%. Maybe people are resilient, or it's people they're talking about interest rate holidays, where if you're on a repayments mortgage, you can switch to interest only for say 6 months or a year, I think it was. So they just don't. The government don't want, and the banks don't want to be sort of repossessing and kicking people out of their homes. But yeah, it's got to come eventually, I think, unless interest rates come down quite sharply very soon. Oh, and ISM manufacturing PMI, people sort of put a huge emphasis on this, even though manufacturing is quite a small part of the US now, but that was 46.7. Anything sort of below 50 is essentially contracting. That was expected to rise, and it stayed exactly as it was last month. So yeah, not ideal. And that was pretty much it for the news. So portfolio-wise, the investor count has sort of seen a reasonable rise. A few sort of stocks doing quite well. Stellantis up to $22. That continues to be sort of one of my best performers out of this lot. 53% up. Broadcom has sort of come down a bit. Nvidia sort of seeing a bit of a drop, and that sort of seems to be following it. Taiwan Semiconductor still sort of bobbling around 95 to 100. Yeah, and the sort of miners seeing a bit of an uptick as well. Rio sort of touching 56, and Vale up as well. So pretty good overall. But it's the ISA that has seen the biggest gain. There's actually a sort of strange bug here. I'm not really sure what's going on, but sort of refresh this and try to sort of see what it is. I think it's Google Finance sort of issue here rather than anything to do with the spreadsheet. It's showing Cleanspark at $5.87, where it's actually sort of closer to $7.60. So yeah, it's a bit higher than this overall, but Cleanspark has been outperforming everything. I'm at 63%. Well, no, I'm actually sort of at probably about 85% gain, I think. So that's been marvellous. Coeur Mining, Equinox Gold, and Fortuna all having extremely good week. They are sort of becoming rather large positions now, even Fortuna, which was one I've sort of not added to for a long while. So that's good. Some of the REITs as well, sort of seeing a little bit of an uptick. Tritax Eurobox actually just sold some facilities for quite a bit, sort of over 10% of the market cap from the looks of it. So yeah, interesting that they're wanting to sort of offload quite a lot. They're not exactly a huge REIT as it is. So the Interactive Brokers ISA, I've changed this to be just Pan American Silver and KGHM. I've put my average cost in at the old average cost rather than sort of because I've just sold it and rebought it. I thought I would just keep my old average cost there to sort of not mask the fact that I'm down quite a bit on that, but it's starting to show a bit of promise. Sort of got into the 14s and it's now up to $16.18. But KGHM is obviously a fresh position, and that's up 4% already off. I think people are starting to take a bit of notice of the silver side, because that has risen quite a bit, and if you're doing 50 million ounces a year, then it's going to provide some extra income. But obviously the copper miners have increased as well, so don't really know what it is. It's I would guess it's probably the copper miners if Rio and Vale and all the rest of them are up. And then on the invest side, correct, the sort of Chinese tech again has barely moved, but it's the options, of course, given that basically all of my options are just leveraged positions on my existing stocks, Coeur Mining, Cleanspark, Equinox, and that sort of thing. They have been doing marvellously well. So overall, I think I was at 11,000 last week, and these are now at 14,683. That's provided a reasonable amount of the gain. I'm not really able to sort of deploy a huge amount of this cash at the moment because sort of everything has kind of rocketed up and sort of makes the potential return over the next 2 years a reasonable amount lower, except Himax, of course. Still sort of higher than it has been over the last few months, but the options don't seem to be moving, so it's quite tempting to put more into Himax. I've got the my sort of little unprofitable desktop metal 3D printer as well. I'm not sure I want to sort of be piling into that. They're sort of projecting a net loss for all of next year, so yeah, it's speculative for sure. But Himax, I am tempted to sort of maybe add to. But yeah, overall, that's where the gains have come from: options, Cleanspark, and gold and silver. So yeah, let me know what you guys are buying if you've had a good week, and like and subscribe. See you soon.